In 1974, where it all began, Pantai built its first hospital in Kuala Lumpur. Then in 1987, Pantai acquired Glen Eagles Hospital in Singapore. Managing Director and CEO is Dr. Kelvin Loh, right? So here he's a doctor, 46, Singaporean. Now this next part might confuse you a little bit, but we actually need to talk about Turkey. Now why? So actually IHH has operations in Turkey, and can I say Turkey? What did I say? Turkey. Hey there, my name is MJ. Welcome back to the channel, best place for long-term stock investors. Today I'm going to talk about IHH, right? The stock. It's related to hospitals, and I'm going to talk about what do they do specifically, what's the business model, some of the history. Secondly, then I'm going to go into the management, the guy in charge. Number 3, the financials, we can never ignore that. And number 4, if you stay all the way until the end, I will share with you my thoughts on whether I think this is an investment worth holding or considering. So why am I covering IHH? Well, it's the largest hospital-related company listed on Bursa Malaysia, but the share price has been flat for the past 6 years. And so today we're gonna talk about why is that the case, especially when healthcare stocks have done really well in 2020. Why is it that IHH is still not really moving? Before we begin, if you want to build a 6 to 7 figure portfolio so that it can help with your financial life, help improve it, check out our free training on this. You can find the links in the description or the comments. Okay, let's start with what does IHH actually do. Now, put simply, they're basically a company that manages many different hospitals. But specifically, what do these different hospitals provide in terms of services? Okay, so the first one is what we call primary care. So these are more normal kind of diseases, things like your cold and your flu. They'll manage it. Preventive care, so maybe any form of drugs, vaccinations, or of course even medical checkups, right? So this is what primary care is all about, and of course IHH provides that. Okay, so the next service is one level up, which is secondary and tertiary care. So what does this mean, right? So basically this is specialist consultation, surgeries, emergency care, anything to do with laboratory services, acute treatments, basically things that are more complex compared to, let's say, treating the flu or cough. So if we break it down, right, secondary would include things like the ER, right, or childbirth, medical imaging services, radiology, and anything in the ICU. Now, for tertiary, again, there's one level up, right? So that's things like cardiac surgeries, cancer treatments, neurosurgery, and things that are way more complicated. Okay, then the last one and the most advanced services they have is what we call quaternary care. So this is things like organ transplant, certain kinds of neurosurgery, reconstructive plastic surgery. So that's another example, and there are many types. Obviously, I'm not a doctor, so I don't know all the different types of surgeries there are out there. Basically, they're the most complex of the complex. All right, as always, we like to talk about the history. Now, some people find it boring, but I think it's important. You need to know where the company came from to roughly know where it is today and where it can go. So in 1974, where it all began, Pantai built its first hospital in Kuala Lumpur. Then in 1987, Pantai acquired Glen Eagles Hospital in Singapore. Then in 1990, it got listed on KLSC. Now, in the past, there was no Bursa Malaysia, so it was called KLSC. So Pantai was listed. And Pantai is actually a company that is a precursor to IHH, if you're wondering. Now, this next part might confuse you a little bit, but we actually need to talk about Turkey. Now, why? So actually, IHH has operations in Turkey. And can I say Turkey? What did I say? Turkey. Well, IHH has businesses and hospitals in Turkey. And in 1991, their current subsidiary called Acibadem was founded, right? But it was only in 2011 where IHH took a roughly 50% stake in the company. Okay, now heading back to Malaysia in 1992, they found what is called the International Medical College. Now, you might not know this name, but you do know this acronym called IMU, or International Medical University, which was actually what came after IMC, which is the International Medical College in 1999, when they got upgraded to university status. For those of you Malaysian, you know IMU is a popular space for doctors to be trained at. So yeah, IHH actually owns IMU. And fun fact, as of 2019, IMU generated 250 million ringgit for the IHH group. Dr. Money, man. So then in 2002, they went into Brunei. 2003, they went to India, which is a very important market. I'll talk about it a little bit later on. Then 2004, they actually did a JV, or a joint venture, with Khazanah, which is a very important institution in Malaysia. And because of that, they decided to actually delist Pantai from the KLSC. Now, 2008, they actually won the land to build the Mount Elizabeth Novena Hospital in Singapore, which is a very famous hospital and probably a very profitable one as well, which opened in 2012. So in the same year, 2012, they got listed as IHH on Bursa Malaysia and SGX, the Singaporean Stock Exchange. 2015, Glen Eagles Chengdu was founded. And then in 2016, they went into Myanmar and Shanghai. So they've come quite a long way.
Alright guys, forgot to add this in, but basically today they have 15,000 licensed beds, over 80 hospitals across 10 countries, and running it are 65,000 employees.
So to give you a sense of where their revenue sources come from, so the first item at 72% of their revenue is Parkway Pantai at about 10.74 billion ringgit a year. Now, to break that down, of that 10.74 billion ringgit, 4.3 roughly billion comes from Singapore, 2.3 comes from Malaysia, India is 3.3 billion, North Asia, which is basically China and Hong Kong, is 604 million, and then the others will be 200 million. So that's the Parkway Pantai segment, which is the biggest revenue generator, 72%, followed by Acibadem Holdings, which is about 25%. That's their Turkey branches. So it's about 1/4 of revenue comes from there. And then IMU Health, 259 million. So IMU is the university. 259 million represents about 2% of their sales. And then Parkway Life REIT, which is just, you know, a bunch of hospitals that they manage. That's about 139.5 million, which is about 1% of sales. And the remainder, 4.1 million, is others. If you're enjoying the video so far, remember to give it a like. Of course, subscribe, click on the notification bell so that you know when new videos are out for you. And if you find anything here that is interesting, please comment, right, so that we can respond to you, or if you have any queries, just leave it in the comments. Now, management, right? Managing Director and CEO is Dr. Kelvin Loh, right? So he's a doctor, 46, Singaporean. Okay, so here's his the history of his career. 1997 to 2001, he was a medical officer for the Ministry of Health in Singapore. And then from 2001 to 2005, 4 years, Assistant Director of the National Healthcare Group. 2005 to 2008, he was the Director of Corporate Planning and Development for the National University Hospital. From 2008 all the way until today, he was part of IHH. So in terms of his tenure in IHH, basically in 2008 when he joined, he started as the Operation Vice President. Then he became the CEO of Mount Elizabeth Hotel, you know, that really important hotel. And after that, he worked in Parkway Hospital, Singapore. Before he became the Managing Director and CEO, he was the CEO of the Singapore Operations Division. And finally, in 2020 January, he became the Managing Director and CEO. Okay, now financials. 2012 revenue was 6.98 billion, roughly 7 billion. And then in 2020, that number was 13.4 billion. So basically, it's a double in 8 years. So roughly 10% a year growth. However, when compared to 2019 numbers, 2020 was actually a 10% decline. So now how about the Q4 of 2020? So revenue was actually compared to 2019, 2% lower. Why? Because there was a postponement of what we call non-urgent surgeries. Why? Because of COVID. The second reason is because of COVID. Foreign patient volume actually had to drop. Why? Because people can't travel. Makes sense. So going back to my earlier point about why share prices have been flat and all that is because ironically, even though IHH is a healthcare stock, and of course you would think, right, with COVID there's more testing, there's a lot of all these things, a lot of their surgeries actually had to be postponed, right? And they rely a lot on what we call medical tourism, which is foreign people coming to receive treatments in IHH. That's no longer available, at least during 2020. So these are some insights for you into the hospital industry and why is it that revenues don't grow or even drop for a hospital company during COVID. However, it only dropped 2% in Q4 compared to Q4 2019 because COVID testing and lab services actually increased. So there's some sort of offset. But, thought I'd share with you this interesting aspect about IHH. So now, net income. 2012, 798 million. But in 2020, it dropped by 75%, which is 199 million over 8 years. And when you compare 2020 to 2019, it actually represents a 50% drop in net income. Why is that the case? Well, they've been aggressively expanding in hopes of future growth, right? If they don't spend this money, they can't generate 10% in revenue year on year. And whether this is a good thing or not, I'll discuss a little bit later on. So how about the quarterlies, right? In terms of net profit, the amount increased 28% quarter on quarter to 371.8 million. Mainly due to higher EBITDA or earnings before interest, taxes, depreciation, and amortization. I know it's a mouthful, but basically that's what it is. And also their net financing costs, basically their borrowing rates, things like the repayment of their loans, actually got lowered. And that's why it increased. So operating cash flow, 2012, the number was 1.06 billion, 2020, 2.44 billion, more than 2x in 8 years. So it's a more than 10% growth. How did they generate that? Again, earlier, as I said, they had to spend a lot of money to generate that kind of cash flows. So in terms of quarterlies, the final number actually didn't really change, right? So in 2020, 2.44 billion. 2019 was 2.47 billion. However, when you look deeper, there are some interesting changes. The first is that the impairment for goodwill actually got bigger during 2020, which means that there's actually a net cash inflow, or rather it's a bigger non-cash item, i.e. it won't affect the operating cash flow, or although it will affect the net profit, it will affect the income statement. They also have bigger inventory purchases 2020, and then they also had a big reduction in trade payables. So these are the three big factors that actually change quite a bit, even though the numbers are pretty much the same when it comes to the operating cash flow. Lastly, the net debt stands at about 6.4 billion. Okay, how about the risks and rewards, or the potential rewards? So let's start with the rewards, or some of the good things about the company that I think I should mention. The first is medical spending, right? Globally, wherever they're situated, whether they're in Turkey, India, China, Malaysia, Singapore, whatever, is growing, right? People are always afraid of healthcare costs. That's why the health insurance industry is very big. In Malaysia, is somewhere between 10 to 15%. And I suspect in their larger market like Singapore, in their larger market, which is Singapore, it's probably around the same or maybe even higher. So that's the first thing. Now, the second thing which relates to the first thing, which is that Singapore is their big base, is their big cash generator. So what happens as healthcare spending in an advanced economy and country like Singapore goes up, then companies like IHH will stand to benefit quite a bit. So related to the first and second one, the third one is that IHH mainly targets their hospitals, which are private hospitals, mainly target rich patients. So what does this mean to you as an investor or as a co-business owner of IHH, right? So what it means is that every time when there's medical inflation, when IHH decides to increase the prices of their surgeries, the hospital beds and all that, these rich patients aren't really going to feel the pain. They might complain about it, but they're still going to get it, right? They'll still be able to afford it. And this just means that the price sensitivity is very low. What does price sensitivity means? Well, price sensitivity just means that if I increase the price of a good, does that affect demand? Does that affect the person who wants the good to not want the good? So for example, if let's say a roti canai doubles tomorrow, you're probably not going to go to that shop, you're going to go to another shop. So that's a very price sensitive good. But in the case of IHH services, that's the opposite is the case, right? Even if you double the medical services, rich people who have the money, who can afford it, will still decide to go with it because they want the exclusivity, they want that's why they go to private hospitals, and that's what IHH is. So the next thing that I think is quite interesting about the company is that they are aggressively expanding in China and India. So of course, China and India, huge population, huge growth, huge economic growth. Healthcare systems are not as well developed as even places like Malaysia, Singapore, or the US. So huge potential there. So to give you a sense of what I mean is that during 2012, they had 3 hospital or medical centers in India and they had none in China. Then by 2019, they had 33 medical centers, medical-related centers like hospitals and all that, 33. China was at 8. So you can see there's a huge growth. Now that's just the number of medical-related centers or hospitals. Let's look at the revenue, right? So in 2012, no revenue was generated from India, or at least they didn't report it. But for China, it was 162 million. In 2019, the India revenue generated was 3.3 billion, and the China one is 604 million. So for the India one, it actually grew 158% every year, the compounded annual growth rate. And for the China one, which is a lot less but still very significant, it grew compounded at 24% a year. So you can see that this is definitely one big growth area for IHH. So now how about the risk? I think the first risk is the valuations, right? Market capitalization, which is how much you can pay for the entire company. Right now, for IHH is 45 billion. Now, why do I say that this is a bit problematic in terms of valuations? Well, because the largest company in Malaysia, which is 97 billion market cap, which is Maybank, has a much more profitable business consecutively, does not need to spend as much money as IHH, and yet IHH just has to double to reach Maybank's valuation. So is it even realistic for me? For me, not really. Doesn't mean that IHH is a bad company. It just means that the valuations is slightly rich to me as of today. Okay, next is that they are spending a lot of money. So they spend roughly 1 to 2 billion a year in terms of maintenance and expansion, or basically capital expenditures. Now, so far it's not been bad, right? Revenue is still growing pretty well. But what this has actually resulted in is that net profit has actually declined, right? It's been dropping since 2015, right? Where the revenue was 933 million and now it's 199 million. This may risk, why is this a risk? Is that maybe the investments are not paying off, right? This is a risk you need to take note of. Now, I'm not saying that this is for sure the case, but of course, you need to dig a little bit deeper as to whether or not the investments are doing well, because it's totally fine to have lower profit if it means more profit in the future, right? You have less profit today because you spend a lot more money. So that's something you need to take note of. And the fact is, it is a risk. So are you willing to entertain it? If you are, great. If you're not, hey, you can always move on. Hope you guys enjoyed the video and hope you found it interesting and enlightening. Hopefully you now know more about hospitals. Of course, if you enjoyed the video, remember to give it a like, comment, subscribe. Come check out some of our other videos if you're into stock analysis. Follow us on Facebook, Instagram, Telegram, things like that. And of course, see you in the next video.